all, welcome to Billionaire. It's RP here. We are recording video on 29th of Jan 2023. So Nifty has finally broken out of the range. It broke 17,761 and dropped towards 17,500. You can subscribe to our channel. This is the daily analysis playlist. We create 1-minute short video, and weekly we create a 15-minute video where we explain the Nifty's move for next week. So for next week, we'll do the Nifty analysis with price action and indicators first. Then we'll check Elliott Wave, and at the end, we'll check the option chain. So Nifty has formed 3 black crows here, and it has dropped. So let's check what we discussed in a previous week. So this is the chart from previous week, 22nd Jan. There we mentioned Nifty has dropped in a 5-wave sequence, 1, 2, 3, 4, and 5. And this pullback will not sustain. We expected Nifty to first again drop towards 17,900 and then expected and move towards 0.65 Fibonacci or 18,400. So this was the chart that we assumed, as Nifty will pull back towards this and then drop, make one more low, and then it will shoot higher. This is what we expected. We gave the annual invalidation level as this one. If this is broken, then this chart will be invalid. So that's what happened. It opened gap up, pulled back, and then made one more low and then started the drop. So the analysis we explained in daily short videos, and we followed step by step. It was very good that we were able to analyze the moves properly once it broken our invalidation level. You can watch the videos, you can visit the site. So let's now get started with price action and indicators. On price action and indicators front, you can clearly notice here Nifty has broken 100 EMA now easily. It has taken support here on 100 EMA. This is white line, which is 100 EMA, this white line. Okay. So it's already trading below 48 EMA and this blue line 38 EMA. So all short-term moving averages, Nifty is trading well below that, and 100 EMA is a long-term, or 200 EMA is another long-term moving average. Nifty is trading in between them right now. It did broke 200 EMA, which is near 17,550. So these are considered as bearish signals. And you can notice here, Aron indicator has turned again to extreme bearish. So when Aron red line is above 70, green line is below 30, it's considered as extreme bearish. Opposite of that is when red line is below 30 and green line above 70 is considered as highly bullish. So from this point onwards, you can see that Nifty was highly bullish. And then from this point onwards, it has become bearish. Okay. So from like after this drop, it gave pullback and then now starting the drop. RSI is also trading below 50, which is considered as bearish signal. It's currently at 35. Below 30, it will be considered as oversold zone. So it might happen that it might go below 30, then pull back, again come back, and it might go like this, creating a divergence. And our view on the downside is now heading towards this level. So price action indicators, you can watch this level as well. Another level to watch is major support near 17,430. Okay, so this is the major support. Last time it did not, it was taking time to cross this level. So I am watching closely this level. So last time it had to break this with gap up. So this is one of the major support. So Nifty has to drop. If it has to drop, it might come towards 17,400 to 430, might give a pullback and then continue the drop. So pullback can be towards this area of 17,760 to 17,800 levels, and then it can continue the dip. So currently the trend is looking bearish. At least 1,000 points fall towards this should come. So this is what I'm concluding with the price action. And the major support, as I said, 17,430 to 400 zones. You need to watch out that support for next session. So let's move forward and check Elliott Wave based analysis now. On Elliott Wave, our positional view since Jan 10 is like this. Here we are expecting Nifty to drop towards 16,700 or 500 even downside possible. And we could have completed this wave 1, this wave 2, 3, 4, and 5. Okay, so this is how I'm expecting Nifty to move. And Nifty's C wave currently is in progress, and we are in this wave. We are here in this wave. After Jan 10th, we discussed that this chart is going to happen. After this drop, there should be a rally if our wave count is right. Another chart we also discussed, Okay, on the same line, we in detail mentioned this chart with ABC as a pullback. This will be a drop in a 5-wave sequence down. So this is what we explained. Another chart we discussed is the second probability, which is having low probability. Sorry, this is leading diagonal structure with 1, 2, 3, 4, 5. So currently Nifty has come to the support 17,565. It broke this support of 0.6 Fibonacci. It made a low of 17,490, right, in last session. So it has broken this support, but still it closed just about this 100 points. 17,600, near that it has closed. So there is a possibility that this chart is also still valid. Okay, then in that case we'll have one more pullback. It will make one more top, and then we can go in another round of consolidation before going higher for third wave. So for now things are in 50-50 situation. Both chart can happen, but I will prefer the first chart. As I said in our previous videos, that this correction doesn't look to be sufficient, and this wave C is still could be pending. So I'm preferring more this chart. On Jan 1st, we discussed this chart that Nifty is going to make one more low just below 17,774. That Nifty had made the low 17,761. So this chart is also right. And then we discussed in last week that Nifty has dropped here in a 5-wave. Okay, on 14th January, discussed that one more low could be possible, but Nifty did not make that low. It pulled back and then moved till this part and then dropped. Okay, so this is how Nifty moved. This chart doesn't hold any significance now. We'll delete this chart. Okay, last week we also discussed the move like this. We discussed that it will drop like this and then it will go higher towards 18,400 or 0.61 Fibonacci. But at opening itself, it gave gap up opening and invalidated the wave count. So now this is the chart which you can just refer for an ending diagonal case in a wave 5. Okay, so this is ending diagonal structure. That's what we have labeled. We don't have any other labeling available here. This is the best fit as per my analysis. So now these are the charts that we discussed last week. So let's discuss the chart from this week. So in next week, what we are expecting is Nifty to continue the dip. Okay, there is a budget announcement. On that budget day, it can give the pullback. It can give the pullback towards this 17,761 to 800 levels. It can give the pullback after dropping furthermore and then continue the dip. This is what our analysis says. And in next month, maybe in a week or so, we could reach 16,700 to 400 zones. Okay, this is 1.600 Fibonacci extension of this fall. So when you plot like this, when you plot on 0, 1 and 2, you get these number as 1.600 Fibonacci. So 17,400 is the level we need to watch, where there is a good support as well while it's coming down. Internally, we don't have proper counts here. We don't have a proper count from this drop. Okay, and yeah, this happens in third wave. Initially, you are not able to count the waves in a third wave because it's rapid and there are whipsaw movements. So it's very difficult to count the waves of third wave initially until third of third is complete. So we don't know yet if third of third is complete, but if you plot a Fibonacci here from 0 and this point, you get 0.6 Fibonacci at 17,761. Okay, so there is a possibility that it will drop like this and go towards this and then continue the dip. This is one possibility, or it can make one more low near 17,430 to 400, which is support that we discussed in a price action indicators. So 17,400 to 430 you need to watch out for. Then it might give a pullback like this on the budget day. So at the on Tuesday it might complete wave A, and on Thursday before the budget ends we could be before the budget announcement ends we could be in a wave B. Here you won't be able to trade properly. It can make triangle, flat, etc. in this B wave, and wave C can take us towards 17,761. So before budget announcement, this should be the pullback Okay, this should be the pullback. This should be the move of Tuesday. Okay, and this should be the move on budget day, and maybe on the next day it will complete, finish the move here and then start the dip. So just watch this move, let it happen. So these are the two possibilities that we have tomorrow. It might open flat and then dip, make one more low between 17,400 to 430 levels, or it can give a smaller dip, slow dip, and then continue the rally. But I'm preferring the case of first drop towards 17,400 to 430 levels, and then A wave, B wave, C wave like this. So hope you understand the analysis of Elliott Wave. Let's now move towards option chain. On option chain front, it's clear that 17,500 is acting as a support now, because here there is a maximum put open interest exists. So put open interest, whichever number is the biggest, that will act as a support. So currently Nifty is trading near 17,700, but this number is also looking big. But yeah, as the Friday closed, the short covering did not happen. Some people did not cover their positions, it seems, on from 18,000. From 18,000, some of them did not cover the position. So that's why you see the number higher here. But now, right now, the support is okay, 17,000 is also a support. Then we have 17,500. Okay, so this is the major support for this expiry. Okay, 17,000, and then 17,500 is a second major support. And what is the major resistance here? 18,000, because 88 lakh call writers. So whatever side, call side, highest number, that will act as a resistance. So 18,000 to 17,000 is a range for this expiry. That is very wide range. And second major resistance should get formed between these two. Okay, so this will become a contracted range. So 17,500, okay, to 17,800. So these 300 points we should move by this expiry. So on Monday the positions will be added. So this will become second major resistance. One of these 17,700 to 800. This will become a major resistance, and 17,500 will have more support for this expiry. Only for this expiry. After this expiry, I'm expecting a move towards 17,000. That's what I already told you. So this is how I'm reading the option chain. In last week also, we discussed that Nifty's PCR and implied volatility, which was very low for last week, was suggesting that Nifty could start the dip and volatility could increase just before the budget. So these things we discussed. So budget is ending on 1st, and on 2nd we have expiry. So here you can clearly see now the IVP is very high and PCR is 0.51. So max pain, it will work best during the expiry day. Other days we can ignore it. But here at the money, IV is less and implied volatility is high. So right now the options premium both on call side and put side is very high. After the budget is complete, this IVP will drop and options will lose its premium. So that's what happens. So you should not be holding any buy positions after the budget is announced. You should close your buy positions in options after the like just before the budget is announced. After the budget is announced, options premium will decay and option sellers will benefit. So you have to remember these things. So that's all on the analysis front. Hope you enjoyed the analysis. I will add the summary here. You can pause the video and watch it. Read the summary and understand the move for next week. Do hit subscribe, like the video, and add the comments if you have any doubt. Then you can add the comments. That will help us to make our videos better, and it will reach to a larger audience if you share with your friends and family. So thanks for watching. See you in a next week, and we'll daily publish the Nifty analysis video as well. It will be 1 minute video. Thanks for watching. Bye bye.